And it's time to get a check on the markets. This week I was joined by market analyst Darin Newsom, and we discussed how the new tensions in the Middle East are expected to influence the markets. Where are we on phase one with China and the USMCA trade agreement? And how is the Australian bushfire affecting the cattle market? A lot of things going on in the markets. On Monday, for instance, grain and soybeans were reported as being lower in overnight trading on Middle East tensions. So how is this current ordeal with Iran and the Iraqi government's kind of stymied our agricultural trade?
It's actually a fascinating development, and really the grain and oilseed complex is kind of living vicariously or just on the ripple effects of what's going on in other commodities. You know, we saw what happened over the weekend, and then all of a sudden gold and crude oil explode higher. And the grains were a little lower because of uncertainty, but then they bounced back. Particularly the soybean market bounced back. And then overnight, Tuesday into Wednesday, we saw the same thing with the retaliation from Iran. All of a sudden, we saw crude oil up $3, $3.50, and gold up $40. But by the time the grains opened on Tuesday, gold was lower. Crude oil was actually like $1, $1.50 lower. Soybeans had opened lower overnight and bounced back. So as we watch this week play out, we're not seeing that much of an impact from the Middle East on the grain and oilseed complex. Everybody seems, you get your initial reaction on uncertainty, and funds and large non-commercial traders don't like uncertainty, don't like their investments being in an uncertain market. But then by the time we get into the day session, the focus seems to be shifting again back towards the USDA reports coming out Friday. So there's a lot of swing back and forth, and grains and oilseeds really aren't moving all that far.
All right, sticking with overseas trade, we've got phase one of the trade deal with China, and USMCA, has been ratified by Congress. What kind of potential do these deals hold for ag producers, and what should they be most concerned with as these when it comes to these trade agreements?
Okay, let's start with USMCA, NAFTA 2.0. From what I've read and from what I see, there's not a lot of change. Now, one side's going to argue this is the greatest thing since sliced bread for the U.S., Canada, and Mexico. The side that's been arguing against is saying there's not going to be that big of a change in the agriculture sector. It's going to have more to do with other industries. So we'll have to wait and see. We'll have to wait and see as far as USMCA goes. The trade agreement with China. Do we actually have one? January 15th is supposedly going to be the signing date for phase one. And phase one has been tossed about in the markets now for a week, 2 weeks, whatever it's been. Just earlier this month, already in 2020, China has come out and said, well, they're not going to increase their imports quotas just to make the U.S. happy, just to buy more U.S. grains. So does that cast a shadow of doubt, a larger shadow of doubt over this signing date of January 15th? I'll be interested to see if it actually gets signed on the 15th. Do we have a deal? Do we not? And every day that this gets put off, delayed, or even signed, every day we move closer to Brazil's next crop, which is supposed to be record large, soybean crop, which is supposed to be record large. So, it just seems to be a delay tactic, a siege tactic against U.S. market until that Brazilian crop is ready to go.
And speaking of the Brazil crop, you mentioned they're expected to have about a 3% increase in soybean production this year, whereas the U.S. Puts U.S. projections to fall. What are some of the contributing factors that we're seeing here in this scenario, and how can this affect prices domestically?
All right, domestically, soybeans have actually done relatively well over the course of the winter, as they were expected to, because we've increased our shipments. We had this little window of opportunity. Brazil had record exports to close out the year, or up through the last quarter of the year. Then it slowed down a little bit because they started to run tighter on supplies. Their old crop was running out, and then they got into their planting season and so on. So the U.S. has been able to play that secondary role, that secondary supplier role. What could happen is if Brazil's crop comes in, let's say starting in that February timeframe, the U.S. basis has been strong. The cash market has been strong. Futures have been holding together relatively well. If all of a sudden we're cut off and we're still running below what we were projecting, what's been projected for U.S. exports this year. So if all of a sudden we're cut off and our export shipments go down to zero or basically nothing, and Brazil takes the place, I think we're going to finally see this strong basis seen across the United States start to crack. I've been watching it closely. It's been an incredible story. But I think the first sign that export demand is slowing down is going to be in this basis. And once that happens, I don't see the futures market staying up all that much longer.
Moving on to ethanol, at the end of December, the EPA received an additional 16 requests for 2019 SREs. If granted, does this fly in the face of the deal that President Trump made with industry leaders back in October?
Oh, of course. I mean, this just continues to push these waivers further and further down the road. And you know, we're just accepting more and more of these waivers. And it does seem to fly in the face, not only what he told the industry, but what he's told farmers and told everyone else.
And last topic I have for you today revolves around the bushfire in Australia. They're a pretty big contributor to the beef market. So what we know right now is the number of cattle and sheep that have expired in the fire has yet to be tallied. What kind of effect do you see this disaster having on the cattle market?
Well, we've seen an explosion, or I like to call it a stampede, in the cattle market this week. Contracts have just jumped higher. They jumped higher Monday, and then they backed off again on Tuesday. Rather unexpectedly. It looked from a short-term technical point of view that they were going to try to go higher. They didn't. But I still think that it's providing some support to the market. This idea that we could possibly see increased export, increased demand for U.S. beef supplies. Another market that's been looked at, another market that's certainly been benefited from the disaster that's going on in Australia is U.S. wheat. We're seeing the Chicago wheat market hold together relatively well, indicating that there's some demand. So I do think these fires, and it's extraordinary to see the maps as to the extent of the fire and the extent of the damage, is providing some support, even if it's just coming in from investment traders thinking that something should happen because of headlines, to both the cattle markets and the U.S. wheat market.